Welcome to FX Street. If you like what we're talking about, you like the content we're producing, head on over to YouTube, join the channel, and then add by hitting the subscribe button. You can follow Kash and I individually on Twitter, Kash at Mangyeko, and myself at Just Analysis One. Taking a look here at Cardano. Cardano's been in, that's not what I want to do up there. I want to change that down here. Cardano's been holding the 120 zone as kind of its newish primary support structure, and that's kind of been the story that it's been painting. I mean, ultimately, there's a huge support zone that exists on Cardano's chart between the Cinco Span B on the weekly chart at 112, and then the top of the cloud at Cinco Span A and the 382 fib retracement, at 130. The volume profile is really in that same range. So there's a ton of, I mean, this is a classic P-shaped volume profile. And, I maintain that Cardano's has a chart that has significant more upside potential than all the cryptos that we're going to go over today in our webinar series. None of them have as much explosive upside potential than Cardano does. I'm not just saying that as a perma bull, just from an analysis perspective here. The time and the length of its corrective move here into this supply zone is quite substantial, and it's also trading now at these massive historical support zones in the composite index. And this candle itself, I mean, if it closes the weekly chart like this, this is a very, very bullish looking candlestick, and that it arrives at the bottom of a move is very bullish. So yeah, I'm very, very bullish on this level down here. I really like how it's positioned and how it will move. So in the event of a bullish breakout, I would see the upside potential probably limited to that $2 even level. That's right where the weekly Kijun is at. But on the downside, if it breaks down, I mean, say bye-bye, we're going to the 40-cent level then. I mean, if it closes below the cloud on the weekly chart, I mean, the volume profile just disappears really, and probably won't see any support coming in until that 40-cent range. But that's what I see for Cardano here in the short term. I'll pass it off to you, Akash.
Thanks, John. So for Cardano, again, I'm going to keep it short. There's not a lot happening here. For Cardano, from a one-day perspective, I see this demand zone here formed from 1.01 to 1.19. And from a 4-hour time frame perspective, I see a descending triangle form here. But because of the presence of this demand zone here, I don't see it going any lower. But there's always a room for Cardano where it disappoints you. So I'm just going to expect that. If we see a daily close below 1.19, then I'm expecting it to continue going lower. But if not, I need a close above 1.30 resistance level here to see 16% upswing, which is predicted by 16% upswing, which is forecasted by this descending triangle, which puts Cardano at 1.51. But I'm also going to pay attention to this 1.44 resistance level here, because there has been quite a few rejections here when it first took place, and also support down here. So for now, the upside potential for Cardano is capped at 1.44, and if we are lucky, it's going to go all the way a 16% upswing as predicted by the descending triangle, which puts Cardano at 1.51. From a bearish perspective, I see it dip into this demand zone here, ranging from 1.01 to 1.19. That would suggest a bearish breakout. From a theoretical perspective, the target for Cardano in that sense is $1.
Well, I have targets way above and over your head. I guess that happens though.
Yeah, the market has been like extremely choppy, so I'm just playing it safe. I don't want to get chopped up.
No, it's the time of year for this kind of stuff to happen. That's for sure. But after Christmas and New Year's, things will get
definitely
back to normal. But All right. Well, that does it for Cardano, everybody. Thank you for watching. Please don't forget to like, comment, and subscribe.